Hey there, and welcome to another episode of MaloneBailey's official podcast, Everybody Counts. Thanks for tuning in today. I'm Caroline Rosen, and I'm from the marketing department here at MaloneBailey. For those of you who aren't familiar with us, MaloneBailey is a CPA firm based in Houston, and we are among the top 11 CPA firms worldwide that represent over 100 public company clients. So we have this podcast, Everybody Counts, which features various perspectives on a variety of topics. So from the latest SEC and FASB updates to discussions on soft skills, practice management, and much more, this podcast explores trends and hot topics that affect us and those in our business. We invite you to tune in to hear from partners and staff alike. The conversation is versatile and everybody's input counts. Today's podcast focuses on a really interesting topic, and I'm delighted to be joined by a special guest who I'll introduce in just a moment. We want you to know that this podcast is part of a three-part series that focuses on the process of uplisting or upgrading between market tiers. This series will feature interviews with representatives from OTC, Nasdaq, and the New York Stock Exchange. The entire series is available on our website in the resources section at www.MaloneBailey.com. It's a really important topic because we often get questions about the process, what it entails, and what a company should be mindful of when moving from one exchange or tier to the other. So joining me to discuss the topic of uplisting to Nasdaq is Andy Hall, who is the Managing Director of New Listings at Nasdaq. Welcome, Andy.
Hi, thanks. Thanks for having me join, Caroline.
Well, we know that you're extremely busy. We thank you for carving out some time for us. How's everything going up in New York today?
It's great. I think the markets are overall up, so another good day in the U.S. markets.
Good, great. Well, before we dive into our conversation on uplisting, if you don't mind telling us just a little bit more about yourself and your role at Nasdaq.
Sure. Yeah, I've been with Nasdaq since 2004.
Okay.
I've been a member of the new listings team since 2007.
Okay.
And I've worked with companies that are going public in a traditional IPO, going private to public and doing that offering. But for the most of that time, since 2007, I work with companies that are already public, companies that are listed on the NYSE or the NYSE American or the TSX or the OTC that might be looking at a Nasdaq listing.
Yeah, okay. Wonderful. So let's talk about Nasdaq in general. Can you give us an overview of the exchange as well as its listed companies?
Sure. Yeah, there's 3 listed exchanges in the U.S. For really common stock. That's Nasdaq, NYSE, and NYSE American. BATS and Archipelago, NYSE Arca, they do list ETFs, but the 3 common stock exchanges are Nasdaq and NYSE and NYSE Amex. In terms of Nasdaq, we have over 2,600 companies that are listed here on Nasdaq in the U.S. We do have some Nordic exchanges, and if you add those in, it's about 3,600 companies. Our average market cap is a little over $3 billion. We've got large caps, mid caps, small caps, micro caps. The industry breakdown is pretty even, but I think there's a little bit of a heavy weight into IT and tech and healthcare and financials. We're very much an innovative growth market. If you look at the Nasdaq Composite, say over the last 5 years, and you put your money in that index, which is a proxy of all of our listed companies, you've more than doubled your money, and it's a nice upward sloping chart. So, not a lot of volatility in there and good growth over those last 5 years.
Okay, great. So, Andy, when a company comes to you and says they want to make a change, what are the most common reasons a company decides to uplist to Nasdaq?
Sure. Yeah, I mean, it's very difficult to be a public company on the OTC sometimes. There's a limited amount of brokers that will quote the over-the-counter market. Once you're listed on an exchange, then everyone will pretty much trade you from a broker-dealer standpoint. So with limited brokers acting as a dealer and a broker in an OTC stock, usually the volume is not as strong. There's the the spreads are typically a little bit wider. But what I hear the most from company executives is the frustrations of investors not being able to invest in their stock. Most institutional investors cannot invest in an OTC security if they're not allowed to within their bylaws. Even retail investors have difficulty investing in an OTC stock. They have to sign a waiver with their broker, understanding those inherent risks. It's just one more step they have to do. And then the brokers can't even solicit that company. So maybe there's a client of theirs that's really interested in clean tech. There's a clean tech company right there in their area. That broker can't say to that investor, hey, take a look at this stock because it's an unlisted security. The other benefits is additional regulatory oversight. On the OTC, you just have FINRA that regulates the OTC market, and then the overlying SEC. Once you become listed on an exchange, we provide regulatory oversight. If we see something where a stock is being manipulated or violating trading rules, we can refer that to the SEC or FINRA for them to come in and find and suspend that broker-dealer. Also, just having the governance requirements that the exchange requires, it's almost like a seal of approval, even for investors that can trade in the OTC world, that they've been vetted, they went through this due diligence process by the exchanges, and they were approved for listing.
Okay. All right. So let's talk about standards now. What are the criteria a company must meet to uplist to Nasdaq?
Sure. Yeah, there's the quantitative standards, which is the published standards that you see on our website, where there's a share price requirement. You can list on Nasdaq with a $2, $3, or $4 share price. For many years, it was $4, and then I think back in 2012, they allowed for a $2 or $3 initial listing share price. And then from a balance sheet perspective, there's a number of standards depending on the type of company it is. If it's a company that maybe doesn't have a strong balance sheet, but they've got a drug that might be coming to the market and they're a biotech company and there's a perceived value there, or a technology, a company could meet under, say, the market cap standard. But typically most companies, the smallest, the most lenient standard is you need to have at least 5 million in shareholders' equity, which doesn't seem like a lot, but sometimes with the smaller companies that are in the microcap space, they're burning through a lot of cash. They're trying to fund and get the operations going, and they're constantly trying to manage their cash flow, and they might not have, the 5 million in shareholders' equity, or they have a going concern on their last audit, which is where the auditor is almost saying in the quarterly or annual report that this company right now doesn't have the cash to suffice for maybe the next 12 months.
Okay.
So and lastly there, Caroline, is that was the quantitative standards. The qualitative is we do background checks on the officers, directors, and principal shareholders to make sure that there isn't any sort of public interest concerns.
Yeah.
So maybe if a past director had some security violations or some bad dealings in a previous entity or previous public company, that raises concern with the exchanges because maybe that's a pattern and this is a public interest concern. So we look at that in addition to the governance. The governance is to have a majority of independents on the board, a fully independent audit committee of 3 members, and an independent compensation and nominating committee.
Got it. Okay. Okay, great. So moving on to process, how does the process work if a company wants to uplist to Nasdaq?
So sometimes we'll have a company that applies and is meeting all the standards right at the very beginning. They have the required share price, they have the strength of the balance sheet, they have the required number of shareholders, and they have the corporate governance in place. They've already have the board members there. So then they apply, and the review process is typically about 6 to 8 weeks. So that's if the company is meeting all the standards at the time of application. We do accept applications from companies that still need to cure 1 or 2 areas or 3 areas where maybe they don't have that last independent director. So they'll fill that seat during the review process, or they don't have the share price yet, and maybe they did a reverse merger into a publicly held company that had a low share price, and they're trading at, I don't know, $1.50 a share, but it's a 200 million market cap company. They might want to do a reverse stock split, not only to meet Nasdaq standards, but take them away from the perception of being a low share price stock to maybe being a $5 stock. So if there's still things to be cured in the process, it could take much longer than 8 weeks. It really will take as long as it will take the company to meet the standards to get the listing approval.
Okay. All right, and what do you hear in terms of the common challenges a company might encounter as they navigate the uplisting process?
I think sometimes it goes back to the need of capital, where they're burning through a lot of cash every month. As I said, they're just getting things going with their technology or their product or their business line. They're starting to build revenues, but they still need a lot of cash, and they're not profitable. And the need for that capital, and also the desire to list quickly as well, just because they want to have access to a broad shareholder base, see as credible and legitimate as a public company with the listing, and the struggle to get the financing, and maybe to do a deal that maybe they shouldn't have. Maybe they do a public offering and they take too much of a discount off what the market price is in order to get that capital, or they do a private placement with an investor and the terms are really sided to the investor, and it puts the company in a difficult position, and that's something that they have to live with, in the years to come, in terms of it's a preferred stock and they're paying a high coupon to that investor, or they relinquish a large amount of control to that investor because they needed the financing at this critical stage as a company. It's maybe better to, take your time, work on building the business, and do the right financing, the right deal that equates to the right value, and it doesn't hurt the company in the long term.
Okay. All right, great. So what advice do you have for a company that's considering an uplisting to Nasdaq? Any words of wisdom that you can share?
Get the board in order beforehand. You never want to have to be rushing to add an independent director to meet, Nasdaq or NYSE or NYSE American requirements. It makes sense to, have the skilled professionals that are going to have the contacts to grow your business or introduce the right parties or the ideas to really be successful as a public company. Also having the right CFO as a listed company that's having to do those 10Ks and 10Qs every quarter, and do the right disclosures. You don't want to trip up and become late in those filings. That's usually a big hit to the stock price. You want to be able to know that you're a good corporate citizen and doing the right disclosures and not having any mishaps, and having the right CFO with the right experience is crucial to that. So just making sure, and then also try to clean up your capital structure. If you have some warrants out there standing or some preferred stock, which will be, when a new investor comes in, they like a clean capital structure. They don't want all these different layers of equity securities, which, it causes control not to be clean, and they like to have that cleaned up. So I think those three things are important as they start to move towards an uplisting.
Okay, great. So where do you recommend companies go to find information, or who can they speak with at NASDAQ to ask questions about the uplisting process?
Sure. On our website, it's our listing center. So if you just, Google, or on your search engine type NASDAQ listing center, that has all our forms to apply and our rules.
Okay.
There's a good FAQ section there, but it's all right there. There is the rule book there, but the forms are good, that PDFs that summarize as a listed company and a continued listing company. And if it's a company that is looking to migrate up from the over-the-counter, that falls within my scope. So I would be a good contacts, so have them feel free to reach out to me.
All right, fantastic. Well, thank you so much for sharing all of this information today on the uplisting process at Nasdaq. I know that so many of our clients and those who operate in our space will find this information extremely useful. So, Andy, just one last question before we wrap up.
Sure,
We're going to switch
Caroline.
gears a bit. This is called our this or that section. And this is where guests choose between two options. The topic is going to be completely unrelated to uplisting. So, shall we get started?
Sure, please.
So, I see that you went to GW for school.
That's right. Yeah.
Well, I actually went to American, and
okay.
Washington happens to be my favorite city in the world. So I thought we could talk about Washington. So, favorite monument, Lincoln or Jefferson?
I think I like the Jefferson, just because of the cherry blossoms that are there, and I even think of an old Simpsons episode where the poor President Jefferson is all alone at that monument because everyone forgets about him because it's a little bit off the mall. So I'll go with the Jefferson.
All right. Favorite season in DC, fall or spring?
I think spring because I like the
cherry blossoms.
Yeah, and also I did some grad work at American University, so I remember all the flowers that they had there because there was a trustee or someone that donated a good sum of money, and that money had to be allocated towards the flowers in the gardens.
Okay, that's interesting. I didn't know that, but they do have great landscaping. I will say that.
Yep, definitely.
So last one, favorite museum, the Smithsonian Air and Space Museum or the International Spy Museum?
I'm going to go with the Air and Space. Just such a landmark. I remember even going there as a kid and that being my favorite. And I've actually never been to the Spy Museum, so I can't really compare. But
it's fantastic. You've got to go there. It's really interesting.
All right, awesome. I'll do that. But I enjoy DC as well. I enjoy coming back. I guess I got very common when I was there, but now it's more exciting as a visitor. So.
Yeah, no, I really miss it a lot. Well, thank you so much for playing along. We like to keep our guests on their toes with our this or that section.
No, I enjoy that.
And to all of our listeners, please be sure to check out NASDAQ online at nasdaq.com. Lots of great resources on that site. Andy, thank you again for taking time out of your busy schedule to speak with us today, and hopefully we'll get to reconnect with you again in the near future.
Great. I look forward to it. Thanks, Caroline, for including me.
Thank you, Andy. We appreciate it.
Okay. Bye-bye.
So to our listeners, thank you so much for tuning in today. We hope you found the conversation to be insightful and resourceful. And as always, I invite you to check out our website, www.MaloneBailey.com, where you can find other episodes from our podcast, as well as past versions of our newsletter, which contains lots of great SEC and FASB updates and much more information about our service offering. Thanks again, and we'll see you next time.